Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, August the 25th. The year's 2022. Let's talk trading. Trading Tactics Part 3 with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, I was listening to one of those trading nut videos yesterday, one of the order block market structure guys. So I guess that market structure would be a tactic.
Oh, absolutely. And looking back, if you look at the charts and you look what they're doing, it makes some sense. I don't know if I buy into the story as to why it happens, but I can certainly buy into the story of that it does happen, and that's that I think that's the difference. I'm not necessarily buying into the whole idea, the concept of why they think it happens, but I certainly will go and buy into the fact that what they're saying definitely happens. The only problem with it is that at least from my perspective, when I was looking at it, I haven't looked at it probably about a year and a half now, but when I was looking at back then was, you wait for it, and you wait for it, and you wait for it, but you never, I have a hard time figuring out exactly where, that bottom is that you're trying to get back to. So, let's say you're looking for a long trade. I have a hard time figuring out, okay, where's that bottom that you need to run away from, so when it comes back to it, you can put your long on. That's the problem I always had with it. But at the same time, you know, I'll be willing. It happens, so there's no question about that. So if you go and put, you put proper boundaries around something. If you know something that is repeatable and it happens, and you put proper boundaries on it, and you study it, and you figure out what your boundaries are for when it doesn't exactly happen yet because your timing's off or whatever, then you can make money. So I don't see a problem with it in that sense. But it gets back to what we've been talking about, this whole idea of tactics. What are you going to go? What's your strategy of how you're going to go and, put boundaries around things so that you protect yourself?
Yeah, and you know the other thing, like I said, I guess when I woke up, because I listened to it before I went to sleep last night, maybe that's part of the reasons why I had a hard time going to sleep. My brain was spinning. Um, I th- I'm thinking you have, if you don't do this on a 1 minute chart of the market structure, um, and especially the imbalance with the order blocks, I think it's not real. And the reason I say that is because if you say you have an imbalance on a 1 minute chart and you bump it up to five and then you don't see that imbalance. So
Right.
if it's going to be true, to me it's going to be true at the lowest level. And
Mm-hmm.
and everything above that is how should I put this? Is a mirage. I mean, I'm sure they would argue with me because they go, well, look here and look here and look here. But
Right.
to me, it's like, yeah, but then if you look underneath it, go back down to the 1 minute, that's where you're going to find the real imbalance.
Yeah, yeah, and now I think that their one and only argument is because they do look at it from a top-down analysis, meaning that these guys, they look at it and see if they can find it on, let's say, a 1 hour chart. Then they go down and knock it down to like a 15-minute chart. Is it really there still? Okay, it's really still there. Then they knock it down to a 5 or a 1. And so I guess what they would go and claim is that, hey, you need to go and do top-down analysis and see it throughout, and that's what part of your part of your what your methodology is, or part of what your tactic is, that you want to go and see it all the way through. I think that's what their argument would be, and I think that's a decent argument. But the problem is that you're exactly right. There's so many times where you'll see it on one particular chart, and you don't see it anyplace else. And maybe that's a way to filter out good trades and bad trades. I don't, because I don't trade it. And I haven't looked at it in a while. I can't really say, but I understand your point exactly. Yeah, it can be a mirage, and next thing you know, the problem with most traders, TRO, is that where we've talked about this, but I haven't talked about it in a long time, but we've talked about this before. Are you trading what you see, or are you looking to trade? And I think what can happen very easily is, oh, look, it happened. I'm doing this from a top-down point perspective. Oh, I see it on the 1 hour. Oh, I see it on a 5 minute. Okay, that must really be there. But the thing is, reality, with their methodology, is that they should be looking at the 1 hour. They should be looking, looking at the 15 minute, the 5 minute, the 1 minute, and making sure that it's there all the way. And that, I think, is really plays into our topic today a little bit in terms of tactics and such, because the most important thing, I think, in trading is you need to be consistent. Not just consistently, being able to turn a profit. Obviously, that's important. But the thing is, you need to be consistent in your method. In other words, if you figured out that when A, B, and C happen, I can go and take a trade, and I will win X% of the time, and therefore I will be profitable at the end of the week. That I think that's, at least that's how I look at trading. Or choosing a way to go and trade it. I need to go and do it that way, because that gives me some type of structure around to build off of. Well, the problem is, if you're not consistent in your tactics, and which means you're violating your strategy, that's when you get into trouble. And that's why I think the danger is with that particular method could be, because where especially in the beginning, as beginning traders, we tend to like I said, look for a trade as opposed to seeing a trade, and we have to be careful with that.
Yeah, in fact, as you said that, price just broke out of the upper wick zone to the downside. Um, and the thing is, it's like it tested it, once, tested it twice, and then finally broke through. It's good for about 5 pips at the moment. But it's one of those things where you said, yeah, if you've got statistics, well, I see the last time I ran statistics on the pound, I think it was in the somewhere in the 70% or higher chance that once price gets in that wick zone, it's coming out.
Yeah, and it's going to come out, and it comes out at such a high percentage of times that that's something that you can go and hang your hat on. And I said this on the first thing we talked about tactics. One of the things that you need to go and have, I think I even repeated it yesterday as well, and that is this idea: what data points are you hanging your hat on? And that's important. What's the percentage that this actually happens? And if it's the type of thing where it happens only 5% of the time, well, you probably could still make money on it if you're really careful, but it'd be really hard. But what if it happens 95% of the time? Well, then it gets down to that old adage, even a blind squirrel finds a nut, because if you have something that works 95% of the time, you just go and do it, and you'll be better off. But you're saying 75% of the time, Vegas is, I'll use one of your expressions, Vegas would kill for those odds.
Yeah.
But that, and we have to be consistent in our way of looking at things.
And we're right back into that wick zone. But we do have news coming up in about 10 minutes, so things are going to probably get a little crazy here.
Yeah, it's the preliminary GDP that's coming out, so it's the first look at see what the GDP is in the U.S. So we'll see what actually happens there. Anything can happen, and the thing is, it's one of those numbers where, I don't want to say they're fudged, but it's not really fudged. I guess a better way of saying it is, it's one of those numbers that it's a guesstimate. Is really all that number is, because it's the preliminary. But we'll see what happens, and it will probably certainly move the market. The question is, I don't know which way it's going to move it, and that's why I talked about this a week or two ago, and sort of like part of my methodology or part of my strategy, and that I implement through a tactic, and that is that the tactic is I don't trade, around those news events because I don't know what's going to happen. I'll trade after the news event after I see what happens, and that gets back to what I said a few minutes ago, doesn't it? I'm not going to look for a trade. I'm going to trade what I see, and I'd rather have the trade. Yeah, I'd rather have whatever happens in a big news event like that happen, and then I can see what the market's doing and take advantage of how I can make money on it.
Yeah. Now one of the tactics that haven't talked about in a while is looking for reasons not to take the trade. Because if you
Oh
only
yeah.
look for reasons to take the trade, you're going to find it. If you've got one of three reasons to take a trade, you'll probably find at least one of them. And some people like
Exactly.
to talk about confluence. So let's say there's three reasons to take a trade. Well, you'll probably find those three reasons. You know, it, if you stick to one chart, you might have to wait. But what I mean by that is if you stick to one time frame. But if you sit there and you flip between M1 and M5 and all the rest, you'll find a reason to take a trade in a direction that you want to. But there might be one overriding reason not to take that trade
Right.
in
Yeah,
that
and that's
direction.
yeah, exactly. And I think that the best way to go and deal with that is, or at least for me, has been, um, let's say I'm looking down at the 1 minute and I see that the trade is there. Okay, all the things I need to go and take the trade to go short is here. I'm gonna go take short. I quickly glance up at the 1 hour chart. Hey, I'm gonna be going and taking a short into a big up candle. You know, that would be a foolish thing to do. Now you may still take the trade, but that should go and influence how you take that trade. In other words, am I going in a trade to go and hold on to that trade, or am I going into that trade to just try to go and, as you like to say, a smash and grab? Let's go in, grab a pip, and get out. As soon as you get that pip, because why would you go and run into a potential wall? It's not worth it. Whereas at the same time, if you got a 1 minute trade, and it says, this is telling me to go short. I look at the 1 hour. Hey, I got a really nice, 1 hour candle here. It hasn't ranged out yet. Okay. And, at the same time, it's a big red candle. Okay, good. I'll go down and look at the 30-minute candle. Same thing. Okay. Okay. I think this is a good place. And not only is it a good place, not only will I look to get my 1 pip, but I'm going to stick a little bit longer and see if I can make a little bit more money on it. And that's a tactic that you can employ to go and try to maximize how much you're going to make, even when you're trading like I do, where I'm basically just going in there and scalping. Because there are times when you scalp where you'll pick up 1-2 pips, and that's all you're looking to get. And there are other times when you're scalping and you're lucky and you pick up 4 or 5 pips, or even 6 or 7 pips. But the difference is that when I'm going into a headwind, why am I going to fight a headwind? Usually I'll make one or two choices: either A, don't take the trade at all, okay, or B, just take the trade and get what you can get and get out.
Yeah, because in fact we went back into the wick zone, came back out for about I think it was 3 or 4 pips. And the thing is, if you look at M1, that short was a good short, but if you look at M5, that'd be one of those dicey ones because it was a green. You'd be going short when M5 is still green. And that's one of those things where you say, yeah, okay, the tactic is smash and grab. Get one or two and be gone. But
Exactly.
you know what, fellow traders? The fastest 15 minutes in trading is up once again. So I hope you're enjoying this discussion on tactics. And if you've got a tactic you might want us to discuss, go ahead and leave us a reply. So, when you're sitting down and you're trading, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumple One, over and out.